Hi everybody, this is AJ with Succeed in Finance. Welcome back to the channel. In this video we're gonna see three things. First, one example of good trade on Tesla stock. It's in a short-term perspective. It's an example of swing trade. Second, we're gonna see a perfect example of an impulsive wave based on the Elliot Wave theory, a perfect example of impulsive wave with extended third wave. It's very beautiful model. We're gonna take a look at it. And the third thing is we are going to try an attempt for forecasting in midterm perspective in the next what do we think is going to happen over the next 3 or 6 months in the stock market. Okay, if you're new to the channel, please subscribe to the channel, hit the like button to support us, and let's take a look at the charts. Okay, let's start it. So let me show one example of trade. At the 2nd of November, right here, we opened a long position. This was right after the bottom at this was right after the bottom of $380 per share per Tesla stock was registered on Friday the 30th of October, and then on Monday, on the 2nd of November, the stock market started to go up. Yeah, I guess you've watched my previous video about did you buy Tesla stock at $380. It was really a challenge, but definitely this was a very important bottom in the stock price movement of Tesla stock. So let's get back to our position. We opened a position at $400 per Tesla. Actually, this was not the entire position. A little bit later, there was actually a little bit better price, $396 per share. It was opened at a second position. So here was the opening of the long position of Tesla, and see where this position was closed. Part of the position was closed at $450. Why is that? Because from this bottom, from $380 per share until the top at a little bit above $450 per Tesla stock, the market registered a very beautiful impulsive wave. That's what I'm going to show you right now. So this was just part of the position. In order, why we closed here this part of the position, in order to maximize our profit, at least in a short-term perspective. The second part of the position was closed with from the stop loss, but keep in mind, once the market start move toward your direction, you just move a little bit higher the stop loss. In this way, you know that whatever happened, you are not going to lose any money. You are going to register a higher profit or a lower profit, but you are not going to lose money, which is very important. So the second half of the position was closed at $400.16. Okay, let me show you about this example of perfect impulsive wave with the third extended wave. What I'm talking about, let me show right here. Here is the bottom, $380. Here is first wave, second wave, third, fourth wave, and here is the fifth wave. You see? Yeah, let me, in this way, I think it's a little bit, yeah, a little bit better. Okay, let me remove this period separators. Yeah, in this way it is more seen. Okay, here is the first wave. Right after the bottom was registered, it was the top at the first wave was at $406. Then we've got second wave, third wave, fourth wave, and the fifth wave. That is why we closed here. I would say this is an example of good trade, because we succeeded to maximize at least part of the position on a temporary in a midterm perspective. Okay, let's see what I'm talking about when saying that this is a very good example of impulsive wave with the third extended wave. In this case, the first wave, let me first show it in this way. Here is the first wave. When we've got a third extended wave in an impulse, then the best case scenario is that the first and the fifth wave are going to be with a relatively equal price movement. What do I mean? In this case, this length is actually perfectly matches the length of the fifth wave, and then here is the third wave. Let's put here the Fibonacci extension levels. We are taking this measure of the price length of the first wave, and we are projecting it from the bottom of the second wave, and we see here this level 1.61.8% or you see right here, here is the top. So the third wave was a little bit above this extension 1.618% Fibonacci extension, and here is the third wave right here. First wave, third wave, and fifth wave. This is a very good example of an impulsive wave with extended third wave, a classic. It looks like extracted from a fat book for Elliot Wave analysis examples. Okay, I'm pretty excited because it is such a good model doesn't appear so often on the financial markets. Okay, about the third thing that I promised, what we are going to do, we are trying to do an attempt for a mid and long-term perspective forecast. So what happened? In my last couple of videos I mentioned that we are in a very similar position in all major indexes, Dow Jones, Nasdaq, S&P. We are in a fourth wave. It is very good seeing this ABC correction, flat correction. Okay, but what is the problem? Here is unfortunately for a bit long-term perspective, I mean in the next 3 months or 6 months, the future is not so bright. What do I mean? Because this is a fourth wave. Once this fourth wave is over, it is obviously over, sorry about that, then we are going to experience one fifth wave. As I mentioned, we are not so sure as of now if this is just a fourth wave as part of the third wave, which means that we can expect a little bit longer uptrend. We are going to see, and it's gonna be pretty obvious by the end of the year. But the biggest problem is that once this fifth wave is over, we are going to experience again, this is in S&P 500, but the picture is pretty similar in all three main indexes, in Dow Jones and Nasdaq. and here is in S&P. Once this fifth wave is over, we are going to see some a little bit long-lasting correction. Yeah, that's the problem, which means that we expect that once this correction starts, it's gonna take a little bit. Let's put here and try to do some cyclical analysis, because yeah, this correction is going to take place, is going to last for at least 1/3 of the time that this impulsive wave was constructed. What does it mean? That at least in our opinion, let's say something around at least somewhere around January, February in the next year, until this time we are going to experience some correction, which means the prices of the stock market are going to go down or at least sideways. Yeah, unfortunately the stock prices cannot go constantly higher and higher and higher. From time to time we have to experience such corrections, you know. Okay, but this is from the point of view of the technical analysis. Once this fifth wave is over, we are going to experience such a correction. Okay guys, as of now this is our point of view. I highly appreciate your comments. Put your comments below. What do you think about the development on the stock markets? I highly appreciate your comments. Also, please subscribe to the channel, hit the like button to support us, and see you in the next video. Take care.